Time for the disruptors, and George Tsilis is with us, markets correspondent, taking a look at DraftKings, which has an upgrade at JPMorgan. George, I saw, in addition to the upgrade, the market share growing just 3 weeks in to the NFL. I know you're going to tell us about that competitive landscape, but how about in New York? 49% growth. It says the betting handle, the online sports betting handle in New York has risen by 49% year over year. New Yorkers are betting big time.
They are, Nicole, and I think if you think about online sports betting and legalization, that's a huge secular catalyst for DraftKings and the other online sports betting outfits out there. Most of them out there are casino related, like Caesars, Penn National, MGM. I think this is an interesting market that has a lot of secular growth opportunities still in it. Now, if you look at DraftKings, I mean, they're a pure player in the online sports betting world. If you look at their market share, it's greater than 25%, and they continue to execute at the very least from a sales standpoint. Because if you look at also their last quarter sales year over year was 88%. For the full year, going back 4 quarters, 91%, and the estimates for sales growth in the next 4 quarters is over 50%. Well, at the same time, if you look at, more importantly than not, is back in August on the 4th. They actually guided for positive adjusted EBITDA in 2024. So these are positive catalysts from a financial standpoint. The other thing is they continue to generate additional users. Average revenue per user is growing at around 35% year over year based on last quarter's estimates. The only hang up for the company is basically its profitability profile, which is certainly improving. And if you look at JPMorgan's call, which they've moved their target quite a bit higher to the upside, to 37 from 26, they see it effectively the market share gains really helping the economics of the business, especially when it comes down to the acquisition cost of each additional user at the margin. And like I said earlier, online sports gambling is still in a secular growth stage. And I think DraftKings is well positioned alongside what JPMorgan says to continue to capitalize on it.
Understood, and we know sports betting just especially grew during the pandemic, and some things that were hot then are not now, but sports betting definitely still has great appeal. Tell me more about an example trade.
Yeah, so taking a look at the market, Nicole, I think at the end of the day, we may end up seeing the S&P drop another maybe 50 points or so, but I think they'll come and bid this market up, or they'll come in and buy it. So I think in the short term, there's going to be some potential weakness. We've got to keep that in mind. But I think going into November, the markets will firm up. So with that said, if you look at DraftKings, I mean, obviously it's higher today because of the call from JPMorgan. It's on a relative strength basis outperforming, of course, the NASDAQ and the S&P. And if you look at the chart as well, it looks like it's lining up, good in terms of looking at the 20-week moving average. It seems to be firming up and holding that level. So what we can do is to capitalize on maybe some short-term weakness, but again, some intermediate-term strength is place a long call diagonal spread. So what we'll do is we'll sell the October 31 calls. That's out of the money with 24 days to expiration, and we'll use the proceeds to finance an in-the-money November 26 calls. So altogether, this structure will cost a trader about $3 a share in debit or $300 a contract. So the whole objective here is ideally, the sweet spot is $31 by the October expiry, to which point, of course, the November calls have unlimited profits. But essentially, we'd like to see the stock to continue to trend higher between now and the October expiration. And again, if you see the stock above the $31 by the October expiration, that is going to be offset by the November call. So this is essentially a steady trend-based option strategy that capitalizes on some short-term weakness, but also some of the intermediate-term strength that I think will play out in the stock, but also the market.
All right, George Tsilis, thank you so much. A good example trade there. We appreciate it. And, of course, a fun name today. Thank you very much.